guys, welcome back. I'm RexFinance, and today we're going to talk about 3 dividend stocks that won't be cutting their dividends anytime soon. Holy smokes, guys. I just have to say thank you for all of your support on my last video. If you guys didn't see that, I'll leave a link down in the description below. The thumbnail will be showing right here. But man, thank you guys so much for all your support on that video. I've gained a lot of subscribers from that video, so if you're here because of that video, let me know in the comment section down below, and I'm glad you guys are here. I don't know if it was that I was just looking extra good that day or what, but the video just did well, and I'm not complaining at all. And welcome to all of you guys that are new and subscribed recently. So without further ado, let's just get right into this. Now, first I'm going to talk about why dividend investing can be so powerful, and then after that I'll get into the different stocks. So I'll leave a timestamp right here if you want to skip to that part in the video when I actually get to the first stock pick. Otherwise, if you guys want to stick around and watch the entire video front to end, just keep watching. So I first just want to talk about this article that I found regarding compound interest. Now, compound interest is how Warren Buffett made his billions of dollars. And fun fact, as you can see to my left, he made over 99% of his wealth since his 50th birthday. And that was all because he set himself up for success in his first 40 years of investing. Because if you guys didn't know, he actually bought his first stock when he was 11 years old. So I really like this quote right there by Gary Keller and Jay Papasan. I don't know if I'm saying those names right, but they say, where I'd had huge success, I had narrowed my concentration to one thing, and where my success varied, my focus had too. Success is sequential, not simultaneous. So basically what that means is success is built upon over time. It's built upon over in a sequence. So chances are, since my previous video did really well, this video is probably going to be pretty successful too. And this quote really works for anything you guys do in your life. If you want to be successful, it's a sequence. It's a sequence to build up to that success. Most people aren't going to find success overnight. It's going to take many, many, many years. And it actually took the world's best and most famous investor 50 years before he even made his billions of dollars. So I should probably talk about what compound interest actually is, because most people have heard of the term, but they don't know what it actually means. They just know it's powerful. In fact, Albert Einstein himself, according to this article, famously called it the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. Now, this is a little different because we're not necessarily talking about compound interest with dividend stocks, but we're talking about compound dividend investing. So the actual definition of compound interest is the result of reinvesting interest, so that interest in the next period is then earned on the principal sum plus previously accumulated interest. So if you just take that definition, replace all the interest with dividends, that's your definition for compound dividend investing. So that would be the result of reinvesting dividends, so that dividends in the next period is then earned on the principal sum plus previously accumulated dividends that have been reinvested into the company. Now, I might be talking a bunch of gibberish to you, and that's okay, especially if you're new to investing. Now, the reason dividend investing can be so powerful, even as we're in a recession and the markets are probably going to make another dip eventually, especially if we see a resurgence in the virus cases in the fall like many doctors are projecting, dividends can be a powerful tool in times like these. Not only because you're earning income from your investments no matter what, especially if you're invested in companies that won't cut their dividend, which is what we're talking about today, so stay tuned the rest of the video, but also because you can get great dividend companies for cheap because their share prices have all tanked, or they all will tank in the future, or they all will at least probably go down. But their dividends, if they don't cut them, if they don't suspend them, they remain constant. And if you buy more shares of that company at a cheaper price, you're going to earn more in dividend income for that year. Also, another powerful tool is called DRIP, the Dividend Reinvestment Program. You can use this program with most brokerages now. If you don't have it set up, talk to your advisor, talk to your broker. You can get a dividend reinvestment plan hooked up. A DRIP plan automatically reinvests all the dividends you earn from a specific company back into that same company. So yes, you will own fractional shares, but this is powerful, especially if we see a recession and a market downturn, because if you're reinvesting those dividends, you're buying more shares on the cheap, and the more shares you own, the more in dividend income you'll make. And you can kind of see the snowball effect of that. And that's what compound dividend investing is. The drip plan is probably the most powerful new stock market tool to come in the recent years. So I hope some of that stuff was helpful. If not, it might have been just a bunch of jargon to you. I hope you enjoy this next part of the video, because these are companies that truly, I believe, won't cut or suspend their dividends. So the first company we're going to talk about is Realty Income Corporation. Ticker symbol is the big O on this. Now, I did get a lot of my information from one of my fellow YouTubers who has a great dividend channel. If you guys are into dividends, I highly suggest you go check him out. I'll leave the link down in the description below. His name is the Millenial Investor. But back to the company, the reason this company looks so attractive to me right now is because, as you can see to my left, it hasn't recovered from the market dip we saw. It has really struggled since that dip. Back before the dip, it was around $82 a share. And if you buy shares in this company today, you're going to get a 5.4% dividend yield. This is a really, really high yield. And this is a monthly dividend payer, which means you're going to receive dividends every single month of the year, January through December. Most companies pay dividends quarterly, and there's 4 quarters in the year: January to March, April to July, August to October, and the rest of the year. I can't really do that in my head. I'm not a big month. So what this company does is it leases out the properties it owns to big retail chains like Home Depot, like Walgreens, like 7-Eleven, all of those different companies. They lease out their property to these companies, and these companies pay them rent every single month. And because this is a REIT, a real estate investment trust, they're legally obligated to pay 90% of all of their profits. And this might arguably be the best REIT in the entire stock market. So you might be asking, why is the stock price so low? Why has it struggled since the market downturn? Well, it's because people fear that these businesses won't be able to make their monthly rent payments, which I disagree with, because like the companies I mentioned, Home Depot, Walgreens, 7-Eleven, all these companies are open right now. They're making money. Their stores are open. They're not going to struggle to pay their rent. Also, another big deal is this company, Realty Income Corporation, has maintained their dividend through March and April. Like I said, it was a monthly dividend payer. And if they were going to cut their dividends at all, they would have done it in March or April. So I'm really, really bullish on this company in the future. And if it drops below $50 again, you'll see me buying shares of this company. So number 2 out of 3 is Caterpillar. This company is an American Fortune 100 company. And as you can see, their stock price has also struggled through all of this. And that's also another reason this company is extremely attractive to me at these prices. In fact, they recently increased their dividend by 20%, and that dividend's being paid next quarter. So if they were going to plan on cutting their dividend or suspending their dividend, they would have done it for this next quarter, but they chose not to. So I don't believe Caterpillar is going to cut their dividend anytime soon. But right now their dividend yield is about 4%. And like I said, I believe you can get a lot of share price gain out of this company as well. I truly believe this company should be valued between $145 and $150 per share. And the reason I say that is because of their business model. They have an extremely strong worldwide dealer network. They design, develop, engineer, manufacture, market, and sell machinery, engines, financial products, insurance, you name it. They do it all. They're a very diversified business and company. So if one sector of their business goes downhill, chances are the other sector is going to go up. So the fact that they recently increased their dividend by a whopping 20% for next quarter, among their very strong business and the very attractive share price, I believe you can make a bunch of gains with Caterpillar. Now, my third and final stock pick for you guys was actually a company that I featured in my top 3 stock picks for May 2020. There will be a card up there if you guys want to go check that out. So Raytheon has around a 3% dividend yield. It's actually more like 3.3, 3.4 right now. And that might seem a little low to you guys, but that is still beating the market by over 1%. And also, this company only has a 10% payout ratio. That means they only pay out 10% of their net income to shareholders in the form of dividends. Most companies that provide you with 3% or higher dividend yield have a payout ratio of about 50% or more sometimes. So this company has a lot of room to increase that dividend over time. They recently completed a merger, and I talked more about that in the top 3 stock picks for May. So go check out that video like I said. But that merger is going to give them a lot of extra cash. Their business model is going to thrive a lot more, and tensions are only going to rise. A lot of people don't realize that there is economic fallout going on all around the world because of the current market conditions and economic conditions we're in. So I'm going to ask you guys, why did World War II happen? It's because of the economic fallout that Germany experienced. And that was ultimately the largest war that we've ever had on planet Earth. And if war tensions rise, Raytheon Technologies is going to thrive because they recently signed a deal with the Air Force. And the big deal behind that is that all these other aerospace companies did not get that deal with the Air Force. They have the competitive advantage on a lot of these companies supplying the United States military with aerospace technology. And as you can see, this is another company that is very attractive at this current share price. The share price was getting close to $160 per share before the market downturn, but it has not yet recovered. And there's a big chance this company is going to return to those $160 per share levels, if not higher. So the low payout ratio, along with my bullish thesis for this company, makes it extremely attractive to me. And I told people in my last video and also in comments that if you saw this company drop below $60 a share, I would be buying shares. And guess who's going to be buying shares soon? This guy, because it dropped below $60 per share. I put my money where my mouth is. So guys, that is all I had for you guys today. The 3 companies we talked about were Raytheon Technologies, Caterpillar, and Realty Income Corporation. All these companies have great chances at increasing their share price over time, and they won't be cutting their dividends or suspending their dividends anytime soon. So if you guys enjoyed these 3 stock picks, make sure you guys leave a like down below, and also comment to me if you'll be investing in any of these companies. In addition to that, make sure you guys go check out that banger of video. I'm sure a lot of you have already seen it, but if you have not, go check that out. There will be a link to it at the end of this video on my end screen, and also go check out my top 3 stock picks for May. If you like the picks I picked in this video, you'll probably like the picks I picked in the May 2020 video. Tongue twisters. Anyways, that's all I had for you guys. If you guys enjoyed, like I said, leave a like and have a great day.